Hello, everyone. Welcome to Arbitrage Trade. I am Royce Wells, and it is February the 11th, 2024, right before Valentine's Day. So, hope you guys find some love out there. But I am not loving these charts right now. Basically, the title of this seminar is Clarity Amongst Mixed Signals, which means basically we have things that are going on the monthly time frame and things that are going on the weekly time frame that don't agree with each other. The weekly for FedEx, for example, is showing a sell signal has just begun on the weekly time frame for FedEx, but our compass line has just sneaked above our RSI line on our monthly time frame, which basically gives us a little bit of ambiguity in the market. On our weekly time frame, I'm sorry, on our monthly, no, it's our weekly time frame. On our weekly time frame and our dash indicators, we're saying that basically in order for the buy trend to continue, it has to go back down and see 202. If I turn on the dash on our monthly time frame, it says basically for the buys to continue on the intermediate band, it needs to go down to 191. So let's tackle this piece by piece and see if we can find some clarity amongst all of this chaos. So first off, let's bring in our monthly time frame and let's go to that intermediate band because that's the one that's complaining that in order for us to continue, looks like we have to make almost about almost 30% correction. So let's go take a look at that just to begin with. Intermediate band, monthly time frame, and looks like that 191, oh yeah, that's the roughly the very bottom or the edge of where this blue line is at about 196. So it's saying or suggesting that the candles may be too far from that light blue line. And let me bring in our Z Pro indicator and see if it can also tell us some things. I'm going to do it now so that we have a little bit of foreshadowing for that blue line. And with that, we bring that on and turn that on. We see that basically this FedEx is still overall long-term has been in an uptrend that roughly started in November of 09. It had a little bit of a top out about 268 around 2017. Touched the mean line of the middle of our system at about 111 around May of 2020, right at the incept of COVID-19, got all the way back up June of 2021 to basically create a higher high in October of 20 at about 295 and did it again at about 316 before coming all the way back down again to that mean line, bouncing once again, this time in around the low 130s, 140s area, and then picking itself back up. We see these dollar signs and we see it basically going back up. It did get overbought in June of 2023 and has been basically falling a little bit since then. But looking at this, we do see that we are still on the support of our compass line. So looking at this, and it's almost directly in the middle of our trend top and trend bottom as well. So let's try to see by basically if we can't get any clarity in the larger picture, let's go to a very, very small time frame to see if there's any clarity down there. I'm going to start at the 15-minute time frame and see if we can get any clarity by going to our biggest band, which is our infinity band. So we use typically when we're trying to get the overall bigger movement, we take our biggest band on our very small time frame and see what they're doing and see what they suggest is going to be happening next. So on the 15-minute chart, we are near a very bottom because I'm seeing that line looks like it hit something. And that's usually indicative that basically it has or will be forced to turn around in the very near future. So looking at this, our trend top and trend bottom is saying that FedEx has a top out somewhere around 244, but it does have a tradable range that is sitting between 240 and 243 for our RSI, but for our apocalypse band, actually, let's go to where we still have high percentages. So 237 becomes high support in our intermediate band on this time frame up to 245. So it's about a $7 range that it basically more or less wants to stay within over the next near, I want to say 2 to 3 weeks. So we're watching this guy. So then it's not exactly time to get in, but it's not exactly time to get out either. Um, the support is very near at only about $4, and the top of it is also very near, only $2 away. But there's more probability for down than up currently, but that's not the end of the story. Let's go back down to the 5-minute chart and see what it says. 5-minute chart, we're watching to see if the compass line can actually break over that red line. And so far, it looks like it got deflected quite nicely. I like when I see simple moving averages almost make a 90-degree turn. So that means it, once again, hit something and was forced to come back. So this is acting as major, and looks like the 5-minute chart is in charge of FedEx currently. And basically, it is pushing for more down. And as long as we can stay underneath that red line that's permeating this infinity band on our 5-minute chart, that should give us some more down. And as you can see, since we went to a smaller time frame, the probability on these bands have expanded as well. The arbitrage band is saying, hey, for a buy to succeed, we only need to go 242.18, and we have that support still sitting around 238.57. Looking at this from just this perspective, unless we can recapture and get the moving average, which is currently sitting at 242.29, to actually make it above that 242.57, we can't get an overall short-term rise to basically make the monthly time frame true or accurate. So right now, the shorter time frame is agreeing with the weekly chart, not the monthly chart just yet. But remember, in statistics, typically the longer time frame prevails, which means overall I am expecting a longer term rise for FedEx rather than a shorter term fall for FedEx. But basically, both will be allowed to have their season. All right. And let's talk about, as long as we're talking about mixed signals, what is going on with the S&P 500? Are we near a top? Is this a top? Well, we did see that it did get all the way up to about 501.76. We're back again at our 5-minute time frame, trying to figure out what these signals mean. Looks like basically when we touched 501 Friday at about 7:25 in the morning, got repelled. It tried again, got repelled, and it's just sitting up there. With it sitting up there, I want to see where we are going next. And from here, looks like the only way we can get a downtrend, and how these bands work is, the only way we can get an uptrend is if the entire trend top and trend bottom are able to cross over that line. Currently, there was no probability that was allowing this to happen when we crossed at about 11 o'clock on Friday morning. But as it's been drifting sideways, you see that the bottom has basically been falling out, which should allow us to get a little bit of red in the very near future. So there should be a couple of days maybe of down, and possibly us revisiting about 496. But it does have strong support at 496 as well as 494.67. And right now, the RSI and the arbitrage band is saying, hey, there's a 100% chance that we should still be able to hold this, at least on the 5-minute chart, at least for the pre-market going into Monday. Anything past that point, things get a little bit more foggy, because the bigger the band, the bigger the frequency, the longer it takes to get through the system. And it says in order for a buy trend to succeed on this 5-minute chart, we have to go back down and touch those numbers in reality. So with that also being said, we do see that our trend top and trend bottom is about 495 on this time frame. So that means 495 should be adequate support to keep the S&P 500 up and basically satisfy both of these, which should give us some time to basically maybe buy the dip and watch the S&P continue to climb higher. So about a 1% correction. That's not really a correction. That's just an adjustment. So steady as she goes. Looking at this, since I'm looking at the S&P 500, let's go take a look at the Russell 2000. I'm looking at the Russell 2000 on the 5-minute chart. I'm going to zoom in to see what we're seeing here. Looks like the Russell just began a brand new uptrend on the 5-minute chart, starting about 8:45 on Thursday, the 8th of February, and it just keeps pushing, keep pushing, keep pushing. But there is a top in sight. Looks like we run out of probability in our infinity band. Remember, this is our biggest band in the system. We run out of probability on our 5-minute chart somewhere around 202.51. So that means there's about $3 more in here if you want to try to get it. But remember, as long as we travel sideways, it allows the bands to expand. So the fact that we're traveling sideways could allow this to actually creep up and probability to expand some more. So please keep your eyes on this as we ascend through time and through this week. All right, looking at the Qs, because the Qs also, this is a forecast for short term for the Qs, and it looks like also all the way over here using our infinity band, somewhere around February the 1st, around 3:55 Central Standard Time, it triggered a buy trend, and that put us over the line. And then basically, once we were over that line, probability shrunk to make sure that we stayed above that line. And currently, we're just riding. The good and the bad thing about this is Qs can get all the way up to about 443 on this time frame before they're being forced to turn around. But once again, we're seeing the sideways motion. The candles can't get too far away from the red line. If they do, then basically they're forced to have a mean reversion to get back to their center to make their average still way out. And remember that red line cannot leave the top of the band. So with that being said, we're looking to see if this guy will drift sideways more, or if he will drift sideways and stay this sideways just long enough for the trend bottom to shrink and basically make us have support somewhere around this 436.98 area, and see if we can push higher. The short-term time frame, basically this week, I'm looking for a top out somewhere around 443 if we can make it there. And otherwise, I'm looking for support somewhere around 431 on the Qs. Longer term, because I do like to look at the long-term time frame when we're talking about QQQ. I'm going to go back to our arbitrage band and see what we see on this time frame. We do see that basically we're sitting in this upper danger zone. But remember, just like I said on the shorter time frame, if the trend top and trend bottom cannot trespass underneath the RSI line, which is bouncing in our band, then we don't get a uptrend or a downtrend. So we need probability and volatility to be at an extreme to stretch this trend top and trend bottom to even allow us to attempt a downtrend. But as long as the trend bottom is over this RSI line, basically it's all green, and it will be green until further notice. All right, with that being said, let's go take a look at Tesla. I like to pick on these guys because they have fallen so far from grace, but we do see that on our daily time frame, the trend top is trying to make its way above the compass line. And looks like it actually has just slightly, but that should provide resistance, not support, where we currently are. If it can hold this range maybe all week, there's a strong probability the floor from the trend bottom should rise up and allow us to get more up in the shorter term, maybe not longer term, but shorter term. But we need the floor to rise to find support somewhere at this 199-ish area, which means we need the stock to actually try to come up and touch this RSI line, which is around 217. If that is allowed to happen, the probability will continue to expand and the floor will continue to rise, and it should allow us to actually get an uptrend. As you guys saw over here, basically when it was time to go down, the first thing that let us know it was time to go down was that the trend bottom crossed underneath our compass line, letting us know that things are not looking good. Probability is allowing us to actually see underneath the compass line, which allowed us to fall through. So now we're basically on the other side of that gamut. Let's see if it's going to give us a nice rise in the shorter term. Looking at, here's a couple I haven't played in a while. CVM keeps falling from grace. And basically the trend top and the trend bottom, they're basically sitting juxtaposed against this RSI line. It hit the trend bottom on our daily time frame and looks like it wants to bounce. Compass line is still above the RSI line. So anytime things move quickly in one direction, if they move likewise quickly in the other direction after hitting a major support or resistance, that gives us the bounce that we're looking for. If, however, we see this guy stalls out Monday going into Tuesday, then there's a good chance that that blue line will get dragged under the black line, and CBM could have even more cloudy days in its near future. Looking at Bluebird Bio. This guy is a love to hate kind of stock, but looking at this guy on the daily time frame, he's looking like he's getting very close. But once again, same rules apply. If the trend top can't get over the compass line, we won't get an uptrend. We are sitting almost in the deflection zone, so these candles are being drawn like a magnet to the black line, but they're not quite there yet. So it means basically everything is going to be on, and all eyes are going to be on Bluebird Bio this week to see if it's going to actually attempt to cross or be rejected once again. Let's continue on. I'm going to go pick on some more of the stocks since we've been doing so well looking at stocks recently. Let's look at AutoZone. AutoZone on the daily time frame, we have some good and we have some bad. Looking at this guy, remember I told you basically we have to have probability to allow us to get back under. Seeing the dollar signs here lets us know that basically we should have been taking profit, or we should have been taking profit off over the last couple of weeks, as basically AutoZone has been coming down slightly. Looking at this, the compass has trespassed underneath the momentum line, which means there's more downward momentum than upward momentum. And the only way to get past that black line is to trend bottom to first give in first. And so far it has. So if the next Monday and Tuesday basically give us green candles, then we bounce over. If it goes sideways for the next 2 to 3 days, that should allow probability to maybe shrink or come back in just a little bit and basically give us support at this 226.74. And if we just start falling, then probability will continue to expand and the entire band will start to turn down. The trend top and the trend bottom will continue their pace down, but at a very, very alarming rate. So keep your eyes on this and make sure if you're in, you're watching your position. And if you're not and you're looking for a place to get in, seeing that these dollar signs are here, this is not that place currently. On the weekly time frame for AutoZone, basically, once again, the trend bottom has support at about 26.62. So there's still about $18 more worth of red that could possibly come from this. But from that, we should be able to find support because, once again, it has shrank just a little bit to make sure that we are still over the blue line, which means we have support here currently, and it should be able to bounce from there. Looking at international paper, a lot of people have not been paying attention to international paper, but guess what? After that red X, that basically let us know that bad things were coming in the beginning of the week of January the 29th. We got some good news because the following Monday, it also said, nope, just kidding. We're able to get back up. We haven't made it past the halfway point, and that's something I usually like to see just from reviewing Japanese candle patterns. We want this a bullish engulfing, so where if it has fallen, the candle completely engulfs and gets past the halfway point of the candle. And if it does, then that usually means there's more bullish sentiment than bearish sentiment, which means there's more up to come. So right now, the trend top and the trend bottom are also basically hugging this black line, so it's anybody's game. But just for the record, on this weekly time frame where this buy trend began when we were sitting at about 34.20, it is still definitely in effect. You had an opportunity to take profit somewhere around 37.87 when it put that nice oath, letting us know that it was overbought in that run. So that was almost about a 10% return if you were able to sit there and get some of that. And if you overstayed your welcome, well, you gave it almost all back, if not a little bit more. But the last week proved very good and basically got us back over. You should be about 3% or so up if you're still holding on and you have not basically taken profit. Roughly since October, if you basically held this and did this, you had the opportunity to make almost a 10% return. Thanks, Pips, for letting us know where to get out and showing us that overbought. So that way we can leave, and also showing us this entry right here. So maybe we can get back in again when things are looking more favorable. Meanwhile, because it's all about mixed signals this week, let's go take a look at US Steel. US Steel said, hey, you should probably be taking profit because things are not looking good here. Looking at our monthly time frame, also reached the edge of probably on our arbitrage band on our monthly time frame. That's usually a very, very bad thing because that means usually a larger correction is coming. But once again, if for the Japanese candlestick patterns, if we can maintain and stay above the halfway point of this candle, which I think is roughly somewhere in here, then basically we should be able to find support and allow us to continue going up. It basically, anytime it goes too fast, if it offsets, that means we could get a couple of months, because this is on the monthly time frame. January was red, February is currently red. Let's see where we end or begin the month of March to see if we can hold this roughly $42-ish valuation and see if there is more to come. We're not too far from the black line, the red line, or the blue line on our monthly chart, but we do definitely have to cool off because we basically broke probability. We're not even in at this point, so basically we have to get back within our probability range and our Z Pro indicator to be able to have any more up. So hopefully you've taken profit and roughly when it broke over 50, but things are at least going to be cooling off for a little bit. So basically put it on simmer, set your alerts, and just wait to see if there's going to be more. Woohoo, look at this. It's finally, if you guys have been following us, we've been following this roughly since we got our green X. I want to say on our weekly time frame. Let me see if I can find it. Roughly around here, about 129, we got a green X letting us know in October that Amazon was going to try to make its way up when it was sitting roughly at about 126. Since then, it has basically made it all the way up to 174.45 and maybe just a little bit higher because there are wicks on this candle. But anytime you see that Z means probability has ran out and it's probably time for us to take profit. So looking at that Z, I'm going to go down to the 4-hour time frame. How do I know that that Z is there for us? That means on the 4-hour time frame, because our Atlas is set to 4-hour, that we have run out of probability. So I'm going to go there, see there, reset my chart, and see where we are. I'm going to turn on my 3DA and say, yep, we're sitting at the very top, very edge of probability with all the bands saying, hey, there's nowhere to go from here. So if you were able to ride from that 124-ish range, now would be a very good time to take the money and run. Here for a good time, not necessarily a long time. All right, let's go take a look at Netflix. Looking at Netflix, Netflix is not quite there. It was there for a little bit around January 26th when it was sitting almost at $600. It's since then had to give some back because the arbitrage band ran out of probability on the 4-hour time frame. And basically, because of that, we got our sell signal at about 565, and it's roughly about $4 into that. But it is currently trying, meaning that on the 4-hour time frame, the compass line is trying to, because of all this sideways movement, the blue line is trying to get back over the black. And since our trend top and trend bottom are also fixed around the RSI line currently, it is literally anybody's game. If we continue to drift sideways, then basically the trend top will be a falling ceiling. If we start to have any upward momentum, it should make the trend bottom begin to rise, creating support that's rising, which should allow us to find support on that 562 valuation. All right, let's continue on. Let's go look at real estate. Real estate has been getting beaten up quite ugly and messily, but on the 4-hour time frame, it's saying, hey, there might be some reprieve. There might be some ability for an uptrend. Starting roughly, see all this volatility that basically happened on Thursday going into Friday. That volatility allowed the trend top, which had no chance of getting over that black line, to expand. So now there is a chance that these candles can break over that black line and find support, and the compass and momentum line can potentially get up there and find some support. With that being said, I want to see if we can basically get over 2384, and if we can, that should allow us to find a whole lot more fun in real estate, and our property value should all go up. All right. Enough about stocks. Let's go take a look at Bitcoin and crypto. All right. Looking at Bitcoin, Bitcoin is saying, hey, let's go, go, go. But notice there's that Z again, that pesky Z that lets us know, hey, while we like you, we can't stay here. But this is a Z that's basically sitting. This is on the 4-hour time frame. We have broken out of almost every band. There are just 2 bands that it hasn't broken out of, but 2 out of 12 is not good. And basically that means it's coming in way too hot. So in order for us to continue having this uptrend, we have to go revisit, according to the 4-hour time frame, that 4,200 valuation. So that's almost a 15% correction on Bitcoin in the very near future. And the RSI band has already started doing that. So let's take a look at the RSI band instead of the arbitrage band to see what it sees, to make sure we don't miss the turnaround and possible short-term change in direction. So I'm going to do that, and I'm going to turn off that. And sure enough, the RSI band, which is the band right short of the arbitrage band, has already signaled a sell trend. So I am expecting a little bit of pull down from Bitcoin going into Sunday afternoon, Monday morning, and maybe even Tuesday. Longer term, for the 4-hour time frame, once again with the dash turned on, it wants to, for the buy trend to healthily continue. The apocalypse band is saying we need to go back down to 42,000. So let's go take a look at the apocalypse band to make sure that it agrees and we agree with it. So what has happened is these candles, they can only get so far from the pink line before they're forced to basically go back and revisit it. And the fact that we're sitting at the very top of this band on the 4-hour time frame, but 2 things to consider. As long as the trend top and trend bottom does not trespass under the compass and momentum line, which they have in that last pull-up, basically we can't get a downtrend. So now that the trend bottom is underneath, if this guy continues sideways, it'll pull up and run parallel with the line and pull itself back over. However, if we get any down whatsoever from here, Bitcoin has to go back down and try to touch that 42,636 area before we can get much and do much else with this trend. Looking at Ethereum, Ethereum is sitting roughly the same. Basically, you can only get so far, and if you go too far, it tells you there's a hard correction, hence those crosses on our 4-hour time frame saying, yeah, I'm not sure why you did it, but you did. Now you have to pay the piper. From that pull that basically put us over at 2,700, we had to come back down and touch that line. There was almost an 18 or so percent correction in a little bit under 12 days. So no one wants to see that. So it's best to not let our hearts and our fancies get wild and let probability take us in the wrong direction. Okay, so once again, trend bottom has gotten underneath, and like I said, if there's any pull down in literally the last 8 hours of this Sunday afternoon has been nothing but red. The compass line has trespassed underneath the momentum line, and basically we have support. If it gets there too quickly, 2473 should be our support. But if it continues just to drift down, it's going to be a falling ceiling, which is going to force these candles to make their way back to the pink line, which is around 2300. So a little bit under an 8% correction if it's allowed to happen from where we currently are. Let me check my own math. Yep, a little bit under 8%. Well, I'll take it. All right. So going on, let's go take a look at Dogecoin, because Doge has made it back up to 8 cents, but Doge is still on the 4-hour time frame, still long-term time frame is still in a sell trend. So from that and from what we're seeing, basically it has support at about 8 cents with a top out about 8.35 cents. On this 4-hour time frame, it can say with about a 57% certainty between about 75 cents and 84 cents. So I want to see if it can actually hold this and stay there. Once again, to get an uptrend, the trend top has to trespass over the pink line, or the trend bottom has to trespass under the red. Either one of those happening will basically tell us which way Doge will be going longer term. All right, enough about this and about that. Let's go to the foreign exchange market. All right, looking at the foreign exchange market, this is DXY. DXY so far has been able to get its top and its bottom over that pink line. So this is basically a key scenario that basically happens. You get lots of volatility going both ways, basically to try to confuse the masses, and then to pull up if it can hold that line and then slow down, the floor rises to meet where it was, and then it becomes support, allowing us to continue on. So both the compass has gotten over the pink line and gotten over the red line, which means that so far on the 4-hour time frame, DXY is heading up to blue skies. And the only thing that'll pull it back is at 103.50. That means we have to touch about 103.50 somewhere in the very near future to basically allow us to continue on. So anywhere near there should allow this guy to turn off. And as long as we're going sideways, it should allow this number to also rise, because the value of DXY is above that value. So that rising is a good thing, and seeing that basically the intermediate band and the advanced band are saying, yeah, probability is great. The dollar is great for more up. Now let's go take a look at the flip side of this coin. So once again, this also happened for NZD USD. So the New Zealand dollar is moving with the US dollar, which is a little bit strange. But once again, we are above that pink line and above that red line. So we want to see where it's going to go. For just a moment, it dipped back under the red line, which means there was a possibility that we're going to get some more down on NZD USD. But so far from where we ended Friday, unless we get a large candle to drop, the floor should remain rising. So on the 4-hour time frame, NZD USD is in a short-term buy trend. Looking at AUD USD, it is not. So it means New Zealand is outpacing Australia right now, and by quite some margin. The thing is, though, the compass line has fallen back underneath the momentum line, and even though the trend top is testing the mean line of the 4-hour time frame on this 4-hour chart, the fact that it is slowing down and our probability for arbitrage band is still definitely in the sweet spot for a fall, looks like we may have an opportunity to actually, going into Sunday/Monday into the Super Bowl Sunday, see basically if the compass can trespass over the black line. If it, however, is repelled, then basically more down is to come. But the fact that the trend top has made it above this black line on our 4-hour time frame does give rise that it is possible to get an uptrend on AUD USD from here. Looking at this, EUR USD has tripped a buy trend on the 4-hour time frame. It means it has made it over. The only thing that basically concerns me is the fact that we're sitting clearly in a sweet spot. If I had to basically, once again, this seminar is called Mixed Signals, or clarity among mixed signals. If I had to bet on the band telling me whether he's moving average or going versus probability, our Z-Pro indicator is like the house at the casino. It is always right, and then everything else just falls in line with it. So if I had to pit the band against the Z-Pro indicator, Z-Pro wins. Currently, it is above, but literally a single candle can pull us right back under. And right now, probability is saying that there's a high probability that the next candle should be red. Also, our top sideways and bottoms indicator is saying we're still sideways, we're not up. So until basically two of these guys agree, then we don't do anything. This one says sideways, this one says sell, this one says buy. You can't have any more mixed signals than that. Looking at GBP USD, GBP USD, it's saying buy, it's saying sell, it's saying sideways. What's going on with these markets? So basically, hold the line and basically let's take a look at additional time frames to see if there's any clarity in this. On the daily time frame, remember daily time frame or higher time frames always trump lower time frames. So if we're looking for clarity, always go to the next time frame up or even the next time frame above that to find some clarity amongst misguiding indicators on smaller time frames, because it all ends up being noise if you don't know where to look. On the daily, GBP USD also still mixed. We got sideways, we got buy, we got sell. So that means they're almost completely opposite of what's going on the 4-hour time frame. So let's keep going up in time until we have something that says, hey, yes or no, which way are we going? So two of them agree on this time frame, but then again, I take that back. Only one of them agrees. We got a buy on our Z Pro indicator, but it's hugging the line, and only about a 4% chance that a buy will succeed. We have that red X letting us know that we did detect a sell trend on our weekly time frame, and our top sideways and bottom indicator are still sideways. So basically, it's drifting. GBP USD may or may not be a good play this week. For the sell to continue, it says that it wants to go all the way up to 132 for the Apocalypse Band. Let's go take a look at the Apocalypse Band real quick to see if that's even a thing. So looking at this guy, he has been hugging basically GBP USD has been wanting an uptrend really, really bad, but it keeps deflecting off of that pink line on our weekly time frame. So that means no matter how much it wants it, it's still saying, nope, not yet. And the longer it drifts here, the longer it's hugging this line, the more probability that it will actually go down, not up, because basically any huge moves to the downside have been absorbed by the system already because it's already been hugging this pink line. So it means it can get pretty far from the pink line because of all the drifting sideways it has done. Not a warm, fuzzy feeling, but it's still a feeling that is very much so possible in here. Looks like my pivot pair got in the wrong place, but now it's back where it needs to be. All right, now let's go take a look at JXY. Actually, before we do that, I'm going to go up to the monthly time frame because seeing that doesn't give me any warm fuzzies either. We do see, all right, let's go back to our arbitrage band on this monthly time frame because once again, on an arbitrage band on a monthly time frame, it's a multi-year trend that's basically going on. So in here, literally since 2022, we've been in a sell. We touched the bottom, and hopefully you guys saw that around 110 and saw it pick itself back up as they crown the new king. But also remember that we just heard this week that King Charles is not doing well. He was diagnosed with cancer, so there's a good chance that Great Britain should be selling off near future. And also, we have two things that agree with that forecast. The red X saying that basically the weakening of the British pound against the US dollar. So we have detected a sell trend, and basically it's still business on the monthly time frame. Nothing has changed. Even since Brexit, we have still just been riding down, 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 down. Hopefully it finds its legs soon, but until then, basically, we're just here for the ride and watching it do. And basically, as it's going back into the sweet spot, I'm not expecting anything necessarily good. Short term, I'm going to go to the RSI band, which is slightly smaller than our arbitrage band, to see what's going on. We saw that it triggered a buy at the beginning of July of 2023, made it all the way up to 131, and basically triggered a sell, told us to basically get back out when it got down to about 119, and then triggered a buy following that in November of 2023. And now we have once again a sell showing up here to let us know that even in the short term, if you're playing at this rate with this band on this time frame, basically make sure that your trends align and you only play when they align. And when you play when they align, you win. When you play when they don't align, you have the potential to win, but you better make sure that you have your alert set, or you could get burned quite severely. Looking at JXY has tried and tried and tried to basically get over its compass line on this time frame, but looks like to no avail. Japan is continuing to sink and sink and sink. However, looking at our Z Pro, knowing that basically we're sitting at negative 74% on our Z Pro scale, anything above 70% or below negative 70% lets us know that, hey, things are about to turn around. So our Z Pro is sort of like a CSI indicator, but we're using probability to measure instead of just randomness to measure. So with that being said, JXY is not looking good, which is why the NZD pairs are continuing to go, and go. NZD JPY triggered a buy again on our RSI, but it's also overbought. So these are conflicting signals saying, yeah, it's overbought, but yeah, get in. When anytime they conflict, once again, don't trust them on any particular time frame. I need them to agree, and if they don't agree, even at my largest time frame, I just sit on the sidelines and don't play. Looking at AUD JPY got an oversold going into January, and so basically that gave us 2 great months of up. And with that being said, we have managed to pull up and gather roughly about 186 pips on AUD JPY as it continues up. We do see that this is a buy. We do see that we're above, and we do see that we are sitting here. The only thing that we have to make sure that we watch out for is the crossing of the compass and the momentum line. If the compass line can get back above the momentum line, that should allow us to have more of an uptrend, but as long as it's underneath, the overall trend is saying I'm leaning towards down, but for the most part, everybody's a go because, hey, we're up. And so Australia versus Japan is still definitely in an uptrend. Meanwhile, Euro JPY, once again, also oversold because of that fall down. It picked itself back up. And it's saying, hey, but it's saying we're out of probability. Don't like being out of probability up here. So anytime we are out of probability, it makes me question exactly what we're doing. So it makes me say, nope, I will just hold the line until I know better or do otherwise. I'm going to bring this guy back down to our RSI so that way we're seeing a little bit more of the same. We saw that basically this sell-off had to basically, it found support. There is a green X, and this is shorter term where we're set to longer term. So longer term, it was overbought. Shorter term, it says, hey, we still have some room and everything is green, but we're out of probability. Once again, I will not play if my probabilities are over 70% on any of these charts. And we have 2 of them, even in the middle of the system, saying, yeah, don't play here unless you really want to get burned. Meanwhile, GBP, JPY. Once again, we got dollar signs saying from where it was overbought, it sold off way too quickly, tripped dollar signs and said, hey, we have to bounce. There's a green X up here that says we have to go. But guess what? We're not overbought currently where we are. Those dollar signs are saying, yeah, let's go. I'm going to basically make sure that the overall overarching long trend is not overbought as well. And basically from the fall, it became oversold, and that's why it bounced at the very beginning of January. How high can it go? You really don't want to know. Probability is not our friend on these pairs, or maybe it is if you're just riding it long. So as Japan continues to sell off, we'll see where we end up longer term. All right, guys, that's all I have. I hope you have enjoyed it, and we will see you next time. All right, thank you. Bye-bye.